Welcome to our weekly market analysis. I hope everyone has been having a great weekend so far. This analysis for the week of July 6, 2024. And this analysis, we're going to look at the employment numbers came out on Friday, July 5th, after 4th of July holiday that I hope everyone had a wonderful time. And my emphasis will be on the reaction of the market on Friday, although it was quiet in some ways that a lot of traders were on holiday, but this still was a interesting day. And we'll emphasize more on the employment revisions. Also, this coming week, we're going to have the CPI and PPI numbers, inflation numbers that obviously the markets and the Fed are watching. Also be aware that Fed Chair Powell, he will be testifying this week, and the markets will be watching every word that he says. Friday, this coming Friday, now the really earnings season starts, and that's mainly with the financials from the Citi to JP Morgan to Wells Fargo. So that will give the markets a better understanding of the health of the economy. Also, last week, what we had, or the end of the week, we had the UK election, and we will analyze that in our lesson of the week and see what happened in the United Kingdom. And it was a historic day, actually. In our lesson of the week, also, I want to look at the power of the dividend stocks. Sometimes dividend stocks look boring, but you'll be amazed at the power that these stocks have. And you will see whether you can really outperform the markets. The last but not least, among other things that we will review, is we have an idea on the stock of the week. We look at a Google option trade strategy. So based on seasonality. So with that in mind, let's look at economy and what happened last week. It was all about the employment, really, the numbers. We did have FOMC minutes on Wednesday, but the main thing the market was looking at after, again, we had the July 4th holiday, was the non-farm payroll. And they came actually better than what the markets were expecting, the 206,000. So on the surface, that would be concerning in a way that, oh, economy is still heating up, the employment is strong. It was above the expectation. Bloomberg was looking at about 190,000. But the interesting thing is there's a couple of things we want to pay attention to. One of them was actually the private payrolls were less than expected, and we will look into that. The other thing was a big revision to the last 2 months, and we will also look into that. Also, on our employment rate went from 4% to 4.1%, went higher. So this also gave the market a little comfort, thinking that the Fed has been looking at that 4% employment and the markets are doing the job, or the Fed's becoming effective, and there will no need to, first of all, any increasing rates, but we will see the lower rates sooner than later. So what did we have? As I mentioned, we had 206,000 in jobs added, but all unemployment did ticked up a little bit at 4.1%. Now, the unemployment rate a year ago was at 3.6%, and the numbers were at that time 6 million. So we want to watch this, that the biggest job gains came from the government. And that also tells us that there is a slowdown on the private sector. Now, it's a mixed bag because the consumers, we want to make sure the consumer is strong, but the markets are looking at what is the success of the Fed in slowing down the economy without really crashing it. And well, that's good news. But also this could be also artificial injection of jobs. Healthcare was at 49,000, social assistance 34,000, construction 27,000. Now, as far as unemployed, the number of permanent job losses actually decreased to 121,000 and now at 1.64 million. So basically what also the markets look at is the average hourly earning. Now, that's at $35 an average. That's up 3.9% from a year ago. Still ahead of what the markets are looking at, and basically keeping up with the inflation numbers right now. So it is important that that also needs to be cooled off, but it's been better than in the past. So this was the second thing I wanted to pay attention to, and that's why the markets actually reacted positively, because the May payrolls were actually revised. Remember, that was a really strong May and it was at 272,000 and it was decreased to 218,000. Now, also there was additional revisions the previous month. So now what we are looking at, it's actually, when you look at the total months, it's only June, and the net revisions really were up 95,000, and that's the weakest monthly pace since December 2020. The 3-month average, meanwhile, has gone from 212,000 to 177,000, again, because of the downward revisions. Again, the markets like that. So this is a breakdown, a year-over-year change in payroll. You see the strength comes from healthcare, government, and lower paying leisure and hospitality. So we can see there's actually negative movement in information, mining and logging, and manufacturing. So what we look forward to this coming week, as I mentioned, pay attention to Fed chairs testifying. Also have the Treasury Secretary Yellen will speak, and that's on Tuesday. And we start at 10 a.m. New York time. So also we will have few Feds speaking. Now, on Wednesday, again, the Fed chair is going to testify at the same time. So pay attention to that. The other big news is, again, Thursday, we want to watch that CPI. You know, we had the June numbers, now it's July. As I mentioned before, the Fed likes to have 3 months of continuity. So let's see how that will work. The market's very much eager to see if we are cooling down. On Friday, we will have our PPI, the producers price index. And we continue with our inversion, the yield curve inversion. You see the 2-year and 10-year. So let's take a look at the markets. What a week we had. Strong, but again, in a big tech, major companies, as we shall see, they led the whole thing. So what we had, you see the divergence, that the Dow was only up 0.66%, but the NASDAQ was up 3.5%, all-time high. The same thing, what we see is S&P was almost 2%, all-time high. Friday, we hit that. You can see Friday, NASDAQ and S&P hit the all-time highs, while the Dow is lagging. Also, we had some events, and again, this employment number came in, and well, that didn't help the dollar, and what has done, the gold has been just doing phenomenally. And basically this year, when we look at it, it's up 2.66%. Copper bounced. We looked at copper and platinum in the past. It bounced from support up almost 7%, and crude oil is up 2%. But Friday, it kind of we will see what happened on charts, what is going on with crude oil. As a whole, the markets were up 1.65%, but where did that majority come? Large cap growth, 3.5%. The rest, look at all these negatives. So it's not, the breadth is telling us there's not a lot of strength. On the other hand, again, the Magnificent Five or the big techs are really leading this market. As far as sentiment, we see the bullish sentiment dropped a little bit. We're still above the average, and the bearish sentiment is pretty flat compared to last week, and we are still below the averages. The fear and greed, we have moved to higher end of the neutral. As far as this, the Citigroup panic euphoria, we're still in that blue zone, which is the euphoria zone, and we are at 0.46, which is above the 0.4. Other thing I want to share with you, as you know, this is one of my workspaces. Look at, we talked about the big boys, and look at the Meta was on fire on Friday. We look at Google, we look at Apple and Microsoft, as well as Tesla. You see big numbers. On the other hand, we see other sectors, a lot of sectors, we see a lot of stocks are in the red, the big stocks. So what we can see here again, basically the leadership is what is carrying this market. Nvidia has been, you know, in a quiet time, and we will look at it in a expected move. So what has happened? We look at the moving averages and Fibonacci. We see in the past couple of months, we've looked at, we have nicely broken above the moving averages. We did have a bow tie. We broke above that. We hit our again objectives with the Fibonacci retracement extensions. We see very nicely just the strength. It's been moving up. Although volume has been low, as I mentioned, you never short a quiet market, and when volume is low, that's not what you do, and that's what the markets you know, you can see have been strong. Also, I want to go, I've said it before, from April high to its low, you see we are very close to our 200% extension at 55.77. It came very close. So after consolidating at 161.8 at 54.57 area, you see how nicely we just jumped. So we might have a little resistance here. We are due to some rest, but July are very strong months, especially in technology. And we will talk about Apple. Apple's best month is really in July. And I want to also share my multiple time frame on Ichimoku. You see how nicely on the 60-minute, on 30-minute, and the 10-minute, we are above the clouds. Monthly is above the clouds. Weekly is above the clouds. We see how in the beginning of the June, once we broke above at the DMI positive, broke above the DMI negative, we see the trend became strong, and that's what we are. So there's still strength in this market, although again, we are due to some kind of retracement, but as I mentioned, I start with the shorter time frame to see if we are due to any type of a correction. You can see the 60 minutes is giving us a little warning. Just be aware, you know, when Sunday night we open, there might be some weakness, but the DMI positive is way above, so with the trend. So we shall see what happens Monday and Tuesday, especially we have a testifying Fed chair. Market will be looking at that. What we can see here, we were overbought last few days, but really because these are quick returns, they are considered locked and, you know, embedded. So S&P still looking positive, although we're hitting the upper edge of the expected move. NASDAQ is the same thing, except we were actually cleaned ourselves as far as the overbought situation. You see usually what happened, it goes and hits its 18-day or the closest moving average. And then now we are close to the Bollinger Band, and we're trying to become embedded. Right now we are overbought, so we'll see if another day will take us to embedded. Russell, we talked about, it's a two worlds. So Russell doesn't have these big AI or technology stocks, big cap stocks, obviously. So it's in its own world. So basically that's the strength is not translating to Russell. Now, whether S&P and Nasdaq are going to pull this in is, we have to wait and see. But right now, we are right under 18, and we've been under that 100-day moving average with the really momentum flat. As far as the Dow is consolidating. We are, really just parking around the 18 and 100-day moving average. Overbought. MACD, you can see how it's narrow, and the width is narrowing. So we see we are in a recoiling. So we'll see if, again, S&P will pull this out. We have the earnings coming. A lot of Dow members will be coming out soon. So that's when we want to pay attention, especially with financials. The Dow transportation, we've talked about that. We are under the hundreds. We are consolidating around that 18-day moving average, and we are overbought. As far as the VIX, again, pretty quiet. As we can see, we are oversold, just consolidating. Look at the width of, again, the bands. As far as the yields, well, they did have a little strength last week. As far as what I mean by that is the yields did go up, but as we talked about, Friday we broke below that 100-day moving average. We will discuss it in the lesson of the week about the Fed expectations. The opposite is true with the 10-year notes. You can see we hit that Bollinger Band. We were oversold and we bounced back. So we'd like to have a second candle break above this, and that would be a nice confirmation of 18-day moving average. The same thing with long-term bonds, the 30-year bonds. We are right against the 30-year moving average, and we are not oversold. We just came out of that. The dollar has been weak because of a couple of things. You see MACD just crossed, so we are getting to weakness. We're probably going to hit that 100-day moving average. The expectation of maybe Fed rate cuts sooner than later, that's affecting. And the opposite is in euro. You see euro now is trying to break above the 100-day moving average. Also, the gold. One thing I have to say about euro is also, got to watch the French elections. It looks like the hard right is not going to be as successful. So maybe that's also affecting the euro besides the dollar. Gold has been consolidating, but nicely. We are above the Bollinger Band, but an overbought. So we need a little consolidation. But it has been strength since this year, or been above the 100-day moving average nicely. And silver is actually even stronger than gold. We haven't, and we are way from valuation wise, way below what gold is when we look at the relative value. So silver could have a long way to go. We are overbought, but we'll see if we can get embedded. So we are breaking above the Bollinger Band. We'll see if that expands. And copper. And we've talked about this 100-day moving average, and we'll see we were oversold. We touched it, and we've had a nice bounce, and we are, momentum is up. MACD is crossing, so that looks good. The same thing I've been talking for a while about the platinum. You see that 100-day moving average, how nicely it kept. We came to that oversold out of embedded. MACD has crossed, so that also bodes well, the platinum. Now, Bitcoin, on the other hand, has had its day, and we'll see. We talked about, be aware of, we have broken below the 100-day moving average. We were embedded. We tried to become oversold. Now we are again getting back to embedded. So we will discuss this in Trade of the Week. So we'll get a little more in depth about the Bitcoin, where we stand. So we are in a crucial points with that. And crude oil had a little drop on Friday, hit the Bollinger Band. It is embedded, so we want to watch that. But with the negotiations with the Hamas and Israel, there was some good signs on Friday that maybe there would be some truce for a few weeks. So kind of retrace, the crude oil actually retrace. So let's take a look at expected moves. You can see how Friday became a nice outside the expected move, strong day. As I said, the volume was low in the sense that we had the holiday, but we did hit all-time high. The same thing with NASDAQ. We are all-time high outside expected move. On the other hand, look what happens. Let me tail of two markets, right? So IWM is closer to its lower edge of expected move. The Dow was almost in the middle toward the higher, and the bonds actually had a strong Thursday and Friday, came close to upper edge, but they stayed inside, while gold has actually gone outside its expected move. Strong Friday, silver even more so, 2 standard deviation outside. And then financials hit the upper edge and a nice that as far as the defining moment. So we stayed in that nice in and out strategy. And then opposite was in the energy sector. We went on Friday and hit the lower edge of expected move. Also crude oil. As I said, it had a strong week, but we hit against the upper edge of expected move. And then I have Bitcoin this week. We did go outside this expected move, and that's that's something we're gonna evaluate even more. So I hope that was helpful. We're gonna move on to our second session, which will be emerging markets and lesson of the week. Thank you.